VINCENZO'S Gold Crypto Investing. In this quick update, you can see the dollar is continuing to rise, and it appears that it has broken out, although it's in this rising wedge, kind of, but it's attempting to break out of the rising wedge, and if it does, your next overhead resistance is all the way up there at about 110, 112, which is another pretty big move, and the dollar's already at a 20-year high. And as you would imagine, the stock market got hammered yesterday, although it was very volatile. They were way down, then they came into the positive, and now they're back into the negative. But that's very interesting to watch the U.S. dollar continuing. Brent Johnson seems to be right initially. We have the dollar milkshake theory, where it's the dirtiest shirt, or it's the cleanest shirt in a dirty hamper. And the dollar's doing quite well right now. Eventually that is going to stop as soon as the Fed pivots. But right now the dollar is rising. So that means the equity markets and cryptos. And like I was saying, I don't remember what I was saying before I got cut off. With the equity markets and the dollar at a 20-year high, eventually the Fed will pivot. But right now you can see the cryptos. It's in this falling channel. And falling channels usually break the other way eventually. And you can see we're getting pumps and dumps in the same little range. And if we can break above this range that we're in right now, you can pump up to 24,054, right? And right now we're subtly trying to hold support on the old all-time high. You can see we're getting squeezed with that yellow descending upper resistance and the horizontal red line, which is the old 20, watch out, bird, which is the old 2017 all-time high. And we're trying to hold that as support. And if we can get some buyers to come in, we could pump up to the 200-day moving average up to around 24,000. If we get rejected, you're going to trade back down over to here. Your lower support on this falling channel, falling wedge, they're both the same type of pattern at about $18,000. So that's what we're watching right now. It's been an up and down volatile week, but that's your range. Pay attention to see if you can break above this. Where is it at now? It's descending 20,000 and change, just above that old all-time high. And that's a critical area that we're watching. Don't buy Luna. It's a scam. That the Quan's a scumbag, right? You can see Ethereum trying to hold support on this green fib circle, right? And we know if it stays above this green fib circle, it's bullish and can lead us up to some upper resistance, which is $1,116 is where you're sitting on right now. But if you can keep that as support, you can try to pump up to $1,219 or even make a run up to $1,299, right? But if you fail to hold that, you're going to come down to the next underneath fib circle, which is down here at $665. So it's quite the range. And that's what we're watching out for. That's what we're watching out for. And Ethereum, right? And Cardano, it's the same thing. We're sitting on this blue support, purple support zone, horizontal, right? And that you can see it's held that support several times right here, right? You can see how it's held several times right here. Look at 1, 2, 3, 4, and a whole group right there. And that's what you're trying to hold right now on Cardano. Let's delete that, get that off, scoot that over. And that's what you're trying to hold on. And if you can continue to try to hold that, you can initially make a run up here at the 200-day moving average at about 51 cents. and then maybe try to even come all the way up here to 61 cents. That's going to be hard to do with this bearish action, because you can kind of say this is a descending triangle where you have descending overhead resistance, right, which is all the moving averages are right there. And then if you did a technical target out of that, you'd go from the top of that move to the bottom. If this was a descending triangle at a point of the breakout, and that gets you into a deep depressing part of the upper part of the upper part of the shit house, right? So we're gonna watch out for that to see if we can't get a nice spike up and get back up into here, or if this does break down and come to the underneath target, right? And then if we look at Dogecoin's sort of the same thing. We're still sitting underneath the 68 cents. If you can get above this white horizontal line right here that we've been talking about, where you've been having major upper resistance, you can try to pump up and get up into this area, maybe even up to 8 cents. But if you get rejected, you're going to come all the way back down to the bottom part of that orange support zone, aka last line of defense, to the shithouse, all the way down here at 49 cents, right? And then if we swing along here and look at XRP, you can see XRP, Cardano's in sort of this area right here, along with XLM. XRP did break out last week, consolidated, broke back down, and now it's consolidating again. And if it comes down, you're going to come all the way down there to that underneath 20-cent target that old Vincenzo'S had for about 10 months. When the price was at 150, 160, 170, we were telling you we were coming down there, and we are indeed very close to there. But if you can get another volume spike, 37 cents would be major upper resistance. Like, subscribe, and share to Vincenzo'S Go Crypto Investing. Peace and love. Peace and love.